Every time the Fed is, thank you for that answer, every time the Fed's taken action to lower capital standards, it claims that doing so would increase lending in the economy and would otherwise promote economic growth. That hasn't been what's happened. Instead, buybacks, dividends, executive compensation have continued to go up even during the pandemic. We empower workers by maintaining tight labor markets and strong financial regulations. I believe strong financial regulation enables the Fed to be more aggressive in helping workers, and that should be your mission. It's time, Mr. Chair, respectfully, you change the way you think about regulating the biggest banks. One other question, Mr. Chair. In addition to adopting pro-worker financial stability policies, the Fed can further help communities of color by leading the push for a strong update to the Community Reinvestment Act. We've seen some good developments there with a different controller of the currency. Last year, the Fed unanimously released a framework for modernizing CRA that was well received by representatives of the civil rights community and by banks. My question, Mr. Chair, is the Federal Reserve still committed to full, not piecemeal, full CRA modernization with an interagency approach, and what is the timing?
We're very much committed to that outcome, and I actually feel good about where we are on this. We're resuming our interagency discussions on it, and I'm optimistic that we'll come out with something that has broad support among the community of intended beneficiaries, and by the way, also among the financial institutions, and that it will be a good, solid updating after many years into the more technologically enabled era that will help the intended beneficiaries quite a bit.
And the timing, Mr. Chair?
Working on it now. I think you'll see we're reacting to a very large, analyzing and reacting to a very large quantity of comments and discussing that with particularly with the OCC, but also the FDIC. It's not clear what their role will be at this time, but we hope they'll join in. I think we'll be making visible progress in coming months. I can't give you a finished date yet, but I think we're moving now.
Okay, thank you. We will be watching. Senator Toomey.
Thank you, Mr. Chairman. Chairman Powell, in your testimony, you said that substantial further progress is still a ways off for the economic recovery, and I think you cite that as a justification for the extremely accommodative policy that you have. I don't think you're referring to the need for substantial further progress in GDP growth. I think it's employment that you're thinking of. The unemployment rate has declined dramatically, but it hasn't reached the pre-pandemic lows. And I think you've also made references to the workforce participation rate. I guess my question is, isn't it entirely possible that for a variety of factors, not the least of which is legislation that we've passed, the labor force participation rate may not get back to the record highs that we recently saw, and we've made it more difficult for the unemployment rate to get back to the record lows that we were at before? And do you take that into account when you determine how much progress we've made towards full employment?
So what was happening toward the end of the very longest expansion, was that people were staying in the labor force later into their careers, and so labor force participation consistently remained above all estimates of where it was going to be. Then what happened in the pandemic was a lot of those people retired, so there have been really significant amounts of retirement. So the truth is, we don't know where that's going to settle out, and it'll take a period of years for us to really understand what the new trend is. I don't see that as a problem for the standard we've set forth for tapering asset purchases, which is substantial further progress. We're not going to need to know the answers to those questions to make a decision that we've made substantial further progress. It will be more of a consideration for raising rates where we've set a higher bar.
Shepard Smith here. Thanks for watching CNBC on YouTube.